Help capture the history of our markets by contributing to the John Lothian News GoFundMe campaign to support the MarketsWiki Education history-focused video series and more.
I thought I saw the writing on the wall, the multi-exchange listings and things like that. And plus I'd been doing this for, almost 20 years, and I was reasonably successful. I mean, I wouldn't say I was not in the top 1%, but I was, if you survive 20 years, you're probably in the top, 5%. We built a nice firm. We saved up some money, so I was probably in the top, 3-5% of all the traders. And so we decided to roll the dice and build Thinkorswim. And that was just, I didn't know what Thinkorswim was going to be, but I had an idea, came up with a crazy name, had an idea what I wanted to do. It wasn't our first shot. We've taken, we took lots of shots over the years in different businesses, but this was the first one that we were willing to leave the floor for. We did everything from restaurants to gold mines, real estate. I would try different things. I didn't think that trading was the only thing in the whole world. We built a money management firm. We built an index arb firm. Those are kind of in the finance business, but the reality was we made most of our money and we did the best, just trading on the floor as prop traders. I was actually in the OEX pit one day, and like I said, we had tried. I was partners with this guy named Scott Sheridan, and Scott and I had tried a bunch of different things. We built a prop firm together. We invested in gold mines together. We built restaurants together. We did a bunch of things together. And the name of our company was the Sosnoff Sheridan Group. So so I turned to Scott one day. I go, "Hey, I got this crazy idea that I want to build this company where maybe we can, maybe if the idea takes off, we can create options on anything." It was not to be an online broker. And he's like, "What do you mean?" And I'm like, an option on a Michael Jordan jersey, an option on a kidney. I don't care what it is, just options on anything. And he's like, "Okay, that's interesting, but what do we know about any of this stuff?" I go, "We don't know anything. That's the problem." But we had made some money together, and we had saved it up, and I came up with the name Thinkorswim. And he's like, "Okay, that's a cool name." And so I said, "I want to pursue this. I want to try to raise some capital," because I was good at raising capital. I said, "I want to try to raise some capital and see if we can, pursue this idea, and we'll do it multi-pronged. We'll try to do options on anything. We'll try to build maybe an advisory, and then lastly, we'll also build an online broker." Just throwing that in there as just tossing it in. And he's like, "Okay, so how do you want to work this?" I go, "Well, you stay in the pit, trade, try to make us some money, and I'll work on this for the next couple of months, and we'll see how it goes." And that was kind of the genesis of the beginning of Thinkorswim. I left the floor. I only traded on expiration Fridays, and I kept my seat, traded on expiration Fridays and maybe a couple of days, and then built Thinkorswim. Hired a website designer, hired a technologist, started to put together a group of 7 people that made the core of the business, and the 7 of us built Thinkorswim. And that's really how it started. And then we morphed into an online broker right away because we realized the other things weren't going to get regulatory approval. And so we just went after it and built Thinkorswim. The first capital raise I did was with National Australia Bank. We were managing some money for them, a couple $100 million, and they were starting a startup fund in 1999. And so they were my first capital raise. We got a $10 million commitment, of which we only took $5 million. And of the $5 million, we only spent $1 million, and we gave them back the other $4 million and bought them out. And the reason we did was because at the time they invested money with us, but they didn't realize they had a reporting requirement because they owned over 24.9% with the Fed, and they did not want to deal with the reporting requirement to the US Fed. So we bought them out right away, and they kept 1 or 2%. The real genius of Thinkorswim was hiring really good developers that were willing to build software. So in other words, mostly every other platform was web-based, and we decided to build a downloadable, a software-based platform, which gave us the ability to use our strengths, which was we had really strong designers and we hired really strong developers. 10 years later, it was 2009, and we were a public company trading under the symbol SWIM. We had 3 different companies trying to buy us out. It was the meltdown, it was the economic meltdown, 2008, 2009. Our stock was way too cheap. And we had 3 companies trying to buy us out at the same time. And our board, Scott and I voted actually against TD Ameritrade, but our board voted for it. We had lost control. And so they chose TD Ameritrade of the 2 others. There was 3 suitors, and they chose TD. I signed a 3-year deal, and so did Scott. We helped TD with the transition, and we changed all the culture at TD. I ran trading there for 2 years, and after 2 years, I went to the CEO, whose name is Fred Tomczak, who we're still very close friends today. And I went to Fred. I said, Fred, listen, I mean, you guys are a great firm, but this is not what I want to do. And I have an idea for another business I want to start, which is called tastytrade. And Fred kind of laughed and said, what the hell is tastytrade? And I go, it's a financial, I want to build financial content, and I'll send you all the leads, like we'll cut a deal. So I'll be a lead generation machine for you. And he goes, well, I like the idea. I want to invest. So I go, okay, let's do this. You can be my lead investor. So Fred said they'll put up $20 million, which is a great lead investment. And I said, fine, I'll put up my own money too. Like I put up, I think, 5 million. And it turned out in the end, we only took 5 million from TD. We didn't it's like almost like a football contract where they tell you they'll give you 20, but it comes in tranches. Yeah. So we only took the first tranche from them. And we didn't take any more money after that. And we put up our own capital, and we raised our own capital, and we cut a deal with them though. And we stayed partners for 5 years. And then they tried to buy us out, and we said no, because we felt if they wanted to buy us out, then we must be worth a lot more money than they were offering us. And then we went out and started, we went out and built Tastyworks. I started Thinkorswim in 1999, and in 2009, we sold it 10 years later. And then in 2011, we started Tasty. And then 10 years later, it's a 10-year rule, I guess, we had 5 companies bidding for tastytrade. And of the 5 companies, we felt the IG deal gave us the most potential to go global. I want to take our network, which has become the largest digital network in the world right now for finance. I want to take our network 24/5 or 24/7. So I want to go around the clock and roll around the clock with content. And then I want to take our software and, there's only one firm that really has global trading software back in the US, which is Interactive Brokers. And I want to, compete with them globally for market share of US listed products. And I think, we're the only firm capable of competing with them. And, they're bigger than us. They'll be a formidable opponent, but at the same time, with IG, instead of being a $1 billion company, we'll be a $5 billion company. My take's a little different than most. I feel that it is a defining moment, a transformational moment in the history of finance. I think this is the binary event which people are going to look back at, which is the transfer of power from passive to active investing. And I look at this as almost a watershed moment, even though it was, in some ways the perfect storm. In some ways, there's plenty of negative around it. People will look back at this moment and say, hey, this is when the retail investor finally, came of age, or got bar mitzvahed, however we want to say it. And I think that this is a key event in the future of everything that we do. So I look at this as kind of, breaking open, financial markets to an entire generation, which ultimately will lead to a lot, makes markets stronger, economies stronger, everything better. We just became the first online broker to launch crypto the first major online broker. Between TD, Schwab, E-Trade, Fidelity, and Interactive Brokers, none of them have it. Tasty became the first major firm to launch crypto this week. We launched last week. So we launched live cash crypto on our platform, 4 coins, unlimited, you can trade it, and 24 hours a day, 7 days a week. And it's been a huge hit so far. I think it's going to be a big part of what will be a trend towards alternative assets, and the inclusion of alternative assets into, trading platforms and things like that. If you're asking me, where do I see the real value of crypto? In the financial sector, I see it cutting out the middleman and allowing us to make significant instantaneous money transfers around the world, which is right now a total pain in the ass using international banks. It's slow and it's expensive. And I think crypto will actually, reverse that and essentially make it cheaper and faster, because we can buy it and sell it instantaneously and just move the money over. I don't see it being transactional in any sense for the time being. I do see it also as part of an ongoing diversified portfolio. Absolutely. Do I think it's priced fairly here? No, I think it's probably a little overpriced.
John Lothian News would like to thank those individuals who have contributed to our MarketsWiki Education GoFundMe campaign. Their financial assistance allows us to produce and distribute videos like this for our Open Outcry Traders History Project or the Path to Electronic Trading video series. Join them in supporting John Lothian News, capturing the history of our industry.